how are we doing? Morning, David. I've got a quick long on DAX at the moment, just trying to get this gap filled. There's a gap where the market actually closed yesterday. There, that's where the actual exchange closed yesterday. So we were gapped down this morning when we opened at 7 a.m. So I'm just trying to get that because it's a very small one. It's not particularly big. So I'm just trying to grab that gap. I'm hoping they're going to just open and reach and get that. I got stopped out of one this morning on it. I took 2 positions and got stopped out of one, but it's looking a bit heavy at the minute. So we'll see. But quick play. I've got a bit of a cold at the moment, just to let you know. One of those horrible feeling like a lead balloon type of things. So if I'm a bit quiet today, that's why. Excuse me. And if I click clear in my throat as well, that's why. So today's the big day for Euro rates. 12:45, we've got the Euro rates being announced. Monetary policy statement, and then at 1:30 this afternoon we've got the ECB press conference. So depending what happens with the rates will depend what happens in the press conference. So if the rates come out as a zero, there'll probably be a load of questions about when rates are going to happen, and we know they're going to happen in July. That's what they've been saying all along, so that's probably what will come out. If the rates do come out as unexpected today, and they do actually make a change today, obviously there'll be a lot of questions as to why and what's going to happen. So either way, we'll probably get some volatility on the euro. It is factored in to be zero. It's been zero since 2016. So we're not expecting them to do anything unusual, but you never know. So morning Diamond, Ferdinand, Stevie. So yeah, that's the main one today. I might try and do a stream at 12:30. I'll see how I feel. But I feel like I had some night nurse last night. And when you have night nurse, it usually makes you feel like a slug in the morning. And when you've got a cold and you wake up feeling like a slug, it's never a good sign, is it? So I'll see how I feel. I'll let you know in the Telegram group. But it would be quite nice to come on, and I might try and do some scalping on the euro. And just try and scalp the movement on the news with some fairly low risk, just to see if I can grab 500 or a grand or so out of that. We've got Macklem speaking at 4 later today as well, so that's our news for the day. Overnight, Bank of England bets on 50 basis point hike in play by September, which is not really any news. There's a bit of yen news came out. Imports are up, trade balance is up, exports are up. So we're looking good for China. Don't trade any yuan anyway, but Korea's doing stuff which I don't care about. Expected 10% interest rate hike. 10% inflation Q4 for the pound. Again, negative for the pound. So I had somebody asking me about inflation rates. How inflation and interest rates and everything affects currencies. It's very, very, very complex, the exchange rates. But at the end of the day, the simple thing you need to know is inflation going up means our money is worth less. So when inflation figures are rising or forecast to rise for a currency like the pound, we're expecting it to go up to 10%, that's negative for that currency. Yeah, so inflation goes up, everything costs us more money, our pound is worth less. Therefore, everything GBP will potentially go down. Obviously, it doesn't just go like that, it moves around a lot depending on what the other currencies are doing. Interest rates, when interest rates are rising, that is to combat inflation. So the central banks will increase the interest rates to try and bring inflation back down, which will increase the power of a currency. So when you see inflation going up and interest rates remaining stable, the currency will drop. And this is what we've seen on the euro, been happening on the euro for the last X number of years. Yeah, it's gradually been getting worse and worse and worse and worse and worse because their economy isn't growing. Inflation is going up, their currency is devaluing, and they're not doing anything with interest rates. Interest rates are really good for people that save money. How many people do you know have got savings in the bank? Very, very, very few. So interest rates going up means absolutely nothing positive for anybody. All it does is drive up the price of your mortgage, drive up the price of your bank loans, drive up the price of borrowing, drive up the price of everything. And as inflation's going up and interest rates go up, doesn't help. So we're basically the entire world is in exactly the same boat at the moment, which is why everything is bearish, which is why we're heading for potentially recession. The other thing that's obviously that affects it are economy and trade balances, all sorts of other stuff. Economics is incredibly complex. But basically, at the moment, everything is bearish. Even the US is expecting inflation to continue to rise. The Fed has much more power with printing money and stuff than most other central banks, so they tend to dig themselves out of it. And look what's happened to the yen. The yen's been doing the same thing. Yeah, not a good thing. So yeah, it's not good all round basically. We got 2 minutes to the open. That's a very short version of what you would expect. But when interest rates go up, typically the currency will tend to continue to go in the bias that it's got at the moment. That's typically what tends to happen. But this is when you get things like the euro changing their rates. This is the first time they've changed it in 6 years, and the market gets used to selling a currency, used to having a weak currency, as we've been used to having a strong currency in various other things like the US and the yen. Things change. Other currencies take over. Other currencies become safe haven over the years, and that's the sort of stuff you just can't know about really until it starts to happen. You see it happening. So quite a big day today, and every time the rate announcement is released, it'll be a big day for the euro, because one of these days that's going to change. When that changes, the stance on the euro will probably change. But very difficult to know at the moment what's going to happen with it. We've got 1 minute to the open. So I've got one position in 0.2% profit. I've had one stop out this morning, 0.25%. So looking at the DAX on the daily, big down day yesterday for the DAX, bigger than the rest. So everything else, NAS we had a push up and a green to red day, down day, but the DAX got hit way harder. This is money, I think, coming out of the German stock market ahead of the rate announcement, readjusting portfolios basically ahead of potential change today. Which is why the DAX got hit a little bit harder than everything else. Markets open, TP'd on that order, so the gap's filled. Okay, so now at least the gap's filled, so we haven't got to worry about that today. That gap was there. That's where the market closed yesterday. That's the gap. So that's done. Get rid of that. That's a nice quick 0.5%. Well, 0.25% because it got stopped out on one. Yesterday, by the way, good day yesterday, 1.7% banked. The Telegram thing is working this morning. Yesterday afternoon, it was a bit patchy. And it seemed to be, when I took a trade not using an EA, it didn't like it. So I'm still working on that EA. Market's just frozen. Look, platform's frozen. There we go, back now. So yeah, it's still working. It's working at the moment. So I'm not quite sure why it had that little freeze. But basically, I took a manual trade rather than using the EA, and then all of a sudden after that, there's a couple of trades I took which didn't ping out for some reason. I don't know why, but anyway. So yesterday basically took a euro yen, got stopped out on that one. Took some NAS and DAX at the end of the day, which got me a nice bit of profit. So overall, pretty good day. 4.5k to target, 8k is the target. So halfway there, 3 days in. This is day 4. Oh, that's a horrible gap. Horrible open. That's a hell of an opening range. That was just a massive dump. So today's plan, I don't really have one. I get the feeling today we're going to get a very whippy session. So obviously the market isn't going to want to dump a load of money into stocks, buying or selling potentially ahead of an ECB announcement. So I get the feeling today we're probably going to see either a sort of a rotation throughout the morning, or if we are going to take a direction, it's probably going to be one of those really steady grinds, but I suspect will be fairly whippy. So I'm going to play it a bit cautious this morning. I think the best play this morning, really, now that I've got that gap fill, is to stay out and make your money in New York when the New York exchange opens, and trade the NAS or the S&P or the Dow or something, because it's going to be whippy. And when we get these massive ranges in, opening range breakouts are very hard to play, because you've got a hell of a lot of movement to do before you even get to the opening range extremes. By the time it's done that, it's going to want to pull back. So it's going to be a tricky open. So we'll monitor this morning, just see where we go, but doesn't look potentially enticing at the minute. So overall, I'm still bearish all markets, but right now we're sitting down at these lows. So if we're going to stay within this range at the minute that we've established, this is where I'd be looking to be a buyer. So I'm bearish long term, slightly bullish this morning, but very difficult to tell what we're going to do. So looking at lower time frame is the best thing to do, and look at where we're potentially going to head if we are going somewhere. So you can see obviously we've tapped into these lows. And we've started to reject. We've got a bullish engulfing on the hourly at those lows. So really, it's going to be a case of if we break out of here or here. If we break down, we're heading to new territory we haven't been to for a long time. If we break up, we've got multiple targets that we can aim for up here. We've got a big old gap as well on the hourly to aim for as well. You can see that we've been in a rotation for a week. If you look at the hourly, it's very clear. You know, we're just literally rolling down, rolling back up again, rolling down, rolling up, rolling down, rolling up, rolling down. Likelihood is we're going to want to roll up today, but at some point we're going to break down. Maybe today, don't know. We'll see. Right, so there's your cataclysmic opening range. 40 points. We had a 60-point opening range yesterday on the NAS. So was it yesterday? Maybe the opening range? No, the opening range yesterday, wasn't it? Was huge on the DAX as well. So yeah, going to be tricky. We'll give it a couple of minutes and just see what happens. But there's no liquidity coming in. Sorry, I didn't have the crickets open. There's no liquidity coming in at the minute. Got a fairly wide spread as well this morning. A little bit more buying than selling, but the problem with these big opening ranges like this is, where do you put your stop? If you're going to go for an opening range breakout, it's too big. If you take any kind of long now, where on earth do you put a stop? You've just got to get in with an amount and hold on. That amount of stop is impossible to sort of extrapolate at this point, so we'll see. What do we think? Up or down today? There's a lot of room to the downside, obviously. Whoops. Areas we need to be aware of. So down, potentially we've got 3 bounce points to the downside for pullbacks. Up, we've got clear space all the way up to there. So there's way more room up at the moment, coming up into yesterday's price action, than there is down. But difficult. And not very quick, obviously, as you can see. So I'm just watching these pre-market levels. Big down day yesterday. We'd think we want a bit of a retracement up today. Yeah, that's my thoughts as well. I do fancy the upside more, but you know, look, I mean, I just get this feeling today's going to be. You remember that day on Tuesday, was it? Literally, I had one winning trade out of about 8. I got whipped to death. Literally, we were whipsawing all day. We were moving, but it was like that. It was horrible. Rather than getting, you know, sort of nice, tight price action, it was whippy as you like. When you put in a candle that big and come back and go, actually, I'm not sure which way we're going today, kind of is a little bit indicative of that's the sort of day we're going to get. And the fact that we got the ECB announcement today, I just get that feeling we're going to be sideways. So the plays today really will be, you've got to take it from a level, you've got to get in at that level. What I'll probably do is leave my stop at 300. So for example, when we get up to there, take a short with a 300 point stop and then drag that stop down to the opening range high. So my risk is going to be virtually nothing. And then get out with like 0.2% or something. You just got to try and bag 0.1s, 0.2s, in and out, in and out, in and out. It's the only way to play the whipsaw market, because otherwise you're just sitting in there waiting for your 0.25%, 0.5%, and the market just comes and takes out both ends constantly. So you want to be taking profits fast and taking them small. Or go for a swing. Obviously, don't forget, 12:45, this market's going to go nuts. The DAX is going to go crazy. So the DAX is going to be waiting to make its move. When the ECB announcement comes out and they know what is happening with interest rates long term, or for the next sort of quarter usually, the stock market will suddenly come to life, because everyone will now start executing their portfolios. All these liquidity, all the funds out there have got a order book sitting there saying, you know, this pension fund wants to invest in this sector, this pension fund wants to buy this stock, these guys want to do this. They've got an order book sitting there, they've got to execute their orders, but it's not in their interest to execute their orders now, because they don't know what the price is going to be at 1 o'clock this afternoon. They would rather wait to see if they can achieve a better price, or just execute the order for the customer later on. It's in their interest to get a better price because they earn more commission. So this is why we see a kind of holding pattern, just letting the algorithms play out. So there you go. So that would have been a short. I haven't taken it. I was talking. That's one thing I noticed yesterday afternoon. I was trading the DAX yesterday afternoon, and obviously because I wasn't streaming, I was concentrating so much harder. My win rate yesterday was, I don't know, it was big. Yesterday afternoon. Yeah, I mean, yesterday afternoon I did so much better because I was concentrating and not waffling. But anyway, so yeah, it's potential short there. Get in and just bring your stop down there. I'd rather actually see a rejection off the highs. Would be nice if we can get back up to there. I'd like to take a short there. See if we can get there, but we may not. There's no liquidity. Nobody's trading this morning. We'll have a look at the FX markets in a minute. Is anybody in any yens short? I got stopped out of that yen yesterday. It's so annoying. It's come down this morning nicely. I was literally in, and my stop got taken out pretty much within 5 pips of it turning. I just got my stop placement wrong on it yesterday. So there's a little bit of yen strength starting to show its head at the minute. Not a lot, but there is some. We'll have a look at those in a sec. 2.5 minutes left on this candle. Bit of selling starting to show. CAD yen short, yeah. We're still in that one. That's good. Nice bearish move this morning, but again, I don't think we'll see an awful lot happen before the New York session. Yeah, I should have taken that short. Never mind. So you're getting in right there. Stop, pull down, out now, get out now. 16 points, just 10s, 15s, 20s max. Just get in, get out, be done with it. Take those tiny percents. It's too slow to actually get any decent positions on. Okay, so watching the opening range low, watching the pre-market low for a potential bounce. What's that, 140? This sort of day like this, I'd be happy to take 2 positions here. Take one here and then add one here. So if it does come down here and pulls off a little bit and then decides it wants to come back down and retest this level, I'll add again to this loser because it's so close together. But I will then move my stop up somewhere like there. So if we do break and go down there, the risk is very small. But if we're going to go into rotation and just push back up again, you've got 2 positions on. I think that's the best thing to do this morning. Just keep it tight. Maybe keep your risk a little bit low if you want to be in, but I think I'd rather stay out, to be honest. Morning, Shalk. So looking at the other indices yesterday, so the NAS, very much the same. We're still stuck in this range at the moment. We've got these this big sort of railroad tracks here. We're in the middle of this range. We've got no directional bias either way at the moment. I've got an alert set here. If we get up to these highs, I want to be shorting out of there. S&P, same thing. We had a nice big down day, bearish engulfing, but it doesn't mean anything. What happened yesterday, it doesn't really mean anything at the moment. Market's not got any directional bias as such at the minute. The Dow, very much the same thing. So we're down at lows. You can see what's happening down at these lows all the time. Yeah. We're just rejecting the lows all the time, then pushing back up, and then we're coming back up, and then we're just immediately turning straight around and coming back down again. So there's one entry there potentially. Just going to try a quick buy. Just reducing the risk down on it. And then add one down here. The FTSE as well has gone into a bit of a holding, but the whole market is just stuck at the minute. We're not going anywhere. So, yeah, rubbish. It's all rubbish. Whoops. Had a good pending short at the high of CAD yen and didn't get taken in by the spread margin. Missed it. Gutted. Yeah, we'll have a look at that in a sec. No, that's looking now. CAD yen. Yes, nice strength coming through on that one. Euro yen's the one that I got taken out on yesterday. Whoops. That'll do. So I got taken out on these. Look at that. You couldn't make it up, could you? There's my stop. That's where price went to. As soon, literally, the second it took me out, it just went and just went out again. But it came up and took me out again, so I'm not too worried. Should have had the stop above the high. That is where typically you would. The reversal alert was in here. Would normally take that with stop above the high. I wanted to keep it tight because I wanted to either be in or out. This was, if you remember, to do with all these weekly levels being hit and stuff. So I thought either it was going to be going or not, but it's gone now. Missed it, unfortunately. Bit of selling coming in. Would you have needed a limit button to take that high just now, or eyeball constantly for market sell? Yeah, looking for a market sell basically up there. The trouble is, I mean, I can't really make a limit button because where's it put the limit? Where would you put the limit order? You can't say put the limit order there, please. You can use recent candle highs and lows. Otherwise, you just have far too many buttons. If you want to place a limit order, just just hit that. I don't use limit orders much. Excuse me. The problem with limit orders is if you have a limit order in the market there, and it can trigger you and go through and take you out and then come back down again like that. And you'd be like, wow, that's a lovely short. Unfortunately, you just got stopped out on your lovely short because you had a limit order. If you're watching the market and actually trading like a trader should, you'll be in that short. Now, bang. That's why I don't use limit orders very much. Because they tend to get, if you're wrong on that, if that is not going to be a resistance and the market's just going to do that, you just got into a trade with, and the price action may well be telling you you're wrong, but you're in now. So you have to get out obviously quick. But the idea of the Price Action Toolkit is to work off of candlestick patterns and work off of price action. So ideally we should be waiting for the candles to close or about to close, the last sort of 30 seconds or so. But quite often the last 30 seconds you'll see obviously price action will change very quickly. So we've got continued, you might be able to hear it in the background, we've got continued selling coming in, but it's like the odd order here and there. It's very weak. There's very, very little happening at all. We've just beautifully tapped straight off of this low pre-market. And now we're not. So I'm just going to watch price action at these lows. If we can tap into this area and then pull back by the time this candle closes, I'll take a second position here and then I'll bring my stop right up underneath these lows. So it'll be like virtually no risk on it. And just see if we can get that range move. very much going to be watching paint dry today, so target's all the way up there. I'm going to get up there. Oh, why didn't I take that one? That would have been me done, basically. Hindsight, wonderful thing. Have I covered Aussie dollar Swiss? Interesting. No, I haven't covered any FX yet. I'll have a look at all the FX in a sec. Do I want to add to this? I mean, it literally is only going to get there. Is it worth it? What's the cancel close indicator called? This is an EA. This that creates this here. It's called the Price Action Toolkit. Price Action Toolkit. Get it on MQL5. So we may be just going to watch this wick. We may be just pulling back to grind. You know what I've said about this? If we get this horrible slow grind down, this is what we'll expect to see. A move back down, then we'll bounce off of that low, then we'll pop back up there, then we'll bounce off of that low down there, and you just get either nowhere or or whipped out. The timer, this thing up here, that is called Candle Timer Countdown MT4. Again, it's on the market. It's a freebie on the market. Candle Timer Countdown MT4. Just had an alert. Ooh, ADR. A couple of ADRs already on the yen. Yen's off. Without me. Typical. Do I want to bother with another position on this? If we can come down and retest this wick and then push from there, I might take another position on it. I want to see it retrace first, really. Morning back. Okay, if we can retrace back down to this wick and then bounce off this wick, just retest that gap. I might go with another buy. I've got 3.5 minutes left on the candle yet. Okay, there we go. Got the wick test. See if we can hold this area here and then just pop back. Oh, come on. This platform does tend to freeze up a little bit more than most. I notice this quite a bit on this Traders Global group with my Forex funds. I do get way more platform freezes like I used to get with Axie than I do with Robo and other brokers. A little bit of selling stepping in. Morning, Alan. Welcome to the watching paint dry session. I'm going to put another buy stop above the high. We've got no price action basically, so there's nothing. It's going to be a slow grind. For the session, so I want to try and maximize on it if I can. If I can get another position on there and break up and get out up here, I'll be more than happy with that, assuming it wants to stay in a range. Just getting ready to add down here if we get a bounce off. If I give myself there 3.5 points, just going to move that down slightly. It's not unusual to come down and take it out by a couple of points, so I just don't want to get taken out if they do a 1 point run of the lows. Assuming obviously we do bounce at the lows, which who knows. God, we're gapped. There's that little liquidity in the market. We've gapped. Got to be careful today, because if some bright spark decides to dump 10,000 contracts into the market, you're going to see a candle like that, or like that. This thing's going to go mental, and you've got a high probability of not actually getting your stop filled. You'll get slipped ridiculously. It's pretty hairy trading when there's this little liquidity in the market. Not much fun at all. So keep stops tight, because if you likelihood is you're going to get slipped on a stop if it gets hit, because the price action is going to be so fast. But we're not seeing anybody dumping anything at the minute. There we go, we've got some DAX coming now. So a little bit of liquidity starting to flow in. There we go. Out. Okay, cancelling that pending. Oh, there we go. So you know that little order there. Boom. Now it goes dead. Pure luck if you're either in it in the right direction or you're not. There's just no way of trading this morning. Let's have a look at the FX pairs. This is a dead duck. So this morning we've got a couple of ADR hits, Swiss yen. So these are the trades obviously from yesterday. Oops. So we had that big ADR push yesterday. So we did 1700. We did sort of 175 ADR yesterday. So if you shorted that ADR hit yesterday, you've milked that nicely. Now we're on the down run. So this is what I was looking to happen. And the same with that euro yen trade that I took. I got in short. I was looking for this drop, 11 days solid up or 9 days solid up, whatever it was. So we were looking for that drop. I just got stopped out on it. So these yens, so pound yen as well, hit to the downside. This is the move we've been waiting for. This is the move we've been anticipating happening. They took out yesterday's liquidity in the Asian session and then they dumped it. So it's all moving. Yen's really, really strong this morning. Obviously, this is all ahead of ECB. So this could dry up very, very quickly. But equally, it could be the start of the move on the yen. So, these massive, strong pushes we've had on the yen, we are now starting to roll over. First red candle's going in. Obviously, we haven't painted this candle yet. This thing could just fly straight back up again, especially with the euro and the Swissy. As soon as that news comes out on ECB and the press conference is over, we could see this completely go up into a bull candle, couldn't we? So be a bit careful. But this was the biggest day yet so far yesterday. So I just got it timed wrong. But yeah, looking really good for shorts now on these. Pullbacks, you want to measure the move and just have a look at where potentially we're coming back to. So if this is going to be a profit take move on this push, we'll be looking for levels to come back to start next leg up. So shorts, these were all massively extended in 4 hours. CAD yen, euro yen, pound yen, US yen. So they're all extended, but obviously they've all been extended for absolutely ages. So if you were trying to position trade these, you'd be in drawdown on them already. But starting to roll over, so all good. So those have hit the dailies. We looked at these yesterday on the weeklies. We looked at the CAD yen yesterday for opportunities on the weekly. We looked at the euro yen. We looked at the pound yen. So if you got into them because of that, they're all nicely playing out. So all good. But how far they're going to go, difficult to tell. So we want to be looking for levels on these. Obvious accumulations where price has pushed from. Yeah. Where we may well get that bounce back out. So we've got the support resistance there, that accumulation. So we've got these accumulations, push, accumulation, push, accumulation, push. These are where the buyers are building up their orders ready for the next move. So anybody that is long-term long out of these positions will quite often be wanting to add to them. So you see the propulsion gaps. You will always find propulsion gaps usually underneath or above these accumulations, which is why we use these as targets. So yeah, where we're going to stop, who knows? This could be it for all we know, isn't it? You just no idea with this yen at the minute. It's so weak. But we've got yen strength coming through. So I think probably we'll get further movement on these after ECB. This may well just be the yen taking advantage of light liquidity ahead of ECB. So difficult to tell what's going on with these, but all playing out if you got into them yesterday. Hourlies, we've got nothing on the hourlies at the moment. Aussie dollar Swiss, gentlemen wanted to have a look at. Yeah, I mean, we looked at this one yesterday as being an opportunity for a short because we've just taken out this liquidity. We've been extended and embedded on the 4-hour RSI since here, and we've only ever actually made that amount of movement. So it's kind of divergence, obviously bearish divergence. So yeah, looks good for shorts. There's loads of room to the downside on this. This is the one I took. I can't remember which of these peaks I took. I took one of these peaks. I can't remember which one it was. I'm pretty sure it was that one. But we've been going lower and lower and lower. We're in a downward descending channel. Here's your peak formation low. We have just put in a new high. So the potential here is that we're going to continue this weak uptrend that we've had, and this is just a flag which is now broken long. So either way, likelihood is we're going to get a pullback. We're either going to get a pullback and a push, or we are going to come and make our next low down here. So either way, this is in a nice spot for some kind of downward movement. If it pushes up, you've got a double top and a double top and a double top potential. So this, it's a really good one because you've got half an ADR move to the next entry. Then you've got a tiny little one there and a tiny little one there, and that's another half an ADR away. So if you got in there and got 2 positions in at half an ADR apart, you'll be in 3 positions. If it gets up there, we're back up embedded again, aren't we? Highly likely one of those is going to react, if it hasn't already, if this isn't where we are just wanting to sweep and drop from. So yeah, Aussie Swiss looks really good for shorts. Hourly, you've had the reverse alert and retest, and it held yesterday. So we just went into an accumulation and held completely yesterday. So the M15 reverse alert was pretty much where the hourly one was in Asia. So yeah, looks good. Looks good for shorts. But you're in an accumulation. So you know, it's the same as everything, isn't it? Looks really good for shorts. It's either going to work or it's not. If it works, you've got loads of downside. If it doesn't and you want to use a stop, you've got a small risk. If you want to position trade it, you've got 2 really easy targets back there, or 3 actually. Yeah, so if you want to get in with a stop, that's a really nice trade. Target on this could be anywhere down here, but you know, look for a 30 or a 50 retracement. If you're going to position trade it, you get in now, you get in there, and you get in there. So 4 hours. Look at that candle. Right, well, we've broken out to the lows. Look at this candle. This is a 5-minute candle, yeah? Complete 5-minute candle. So we've gone from putting in a 52-point move, and the next candle's 10. Unbelievable. I really want to take a big long on this. I'm going for it. This is a massively high risk trade, but because it's highly likely I'm going to get stopped out very quickly. But if they're going to do any kind of retracement on this gap right now, look at the tiny risk. I'll break even today. What's the worst going to happen? I'm going to lose 0.25%. It's got very, very high probability, high reward on it if it pops up though, isn't it? I'm just going to move it down a little bit. Just want to take the spread into account in case they come and double bottom this. Excuse me. So I've got the DAX open on my monitor to my right, and that's why I just flicked over to this, because I saw this. I saw the candle just about to close with just literally no movement. I was kind of hoping it was just going to close as a doji, because that would be a really good sign of a pullback, but it didn't. Still closed bullish, but we'll see. It's 0.25%. It's got a hell of a reward on it if it works. Right. Aussie dollar yen, we just had an ADR as well. Nice. Come on, keep going green, green, green. Aussie yen ADR. So all these yens rolling over nicely if you're in them now. Aussie dollar yen, obviously 4-hour extension, coming out of the 4-hour extension. Let me just quickly, I just want to watch this one while I'm in it. I just want to see what 50% of that candle is, where it is. I want the gap fill down at 141.83. I can't see a gap at 141.83. What gaps are all filled? Uh, 141.83. I've got no gaps anywhere down there. On the DAX anyway. Might be a propulsion gap down there maybe. Come on, let's just have a massive green thing. H4 that is, yeah. H4. I haven't got propulsion gap. You mean on H4? Oh yeah, right. Gotcha. Yeah. Yeah. So the 4-hour propulsion gap there. I'm just going to break even this. It's a big position. It's a big risk. I'm break even so far this morning, so I don't really want to lose it. So it's 0.25%. I might as well just break even it. I'd like to get. I'd like to think this is. Where we are going to create today's mucking about range, and this is the low we've just seen. That'd be absolutely gorgeous. Propulsion gap, yeah, we've done that bit. As long as that keeps ticking in green. This is algorithms just dumping. This is why you just get like a couple of ticks, then it goes dead. Wait for it to tick down, then a couple of ticks, wait for it to tick down. And it's the algorithms just buying up an area. Moving up, selling it. Moving down, buying it. Moving up, selling it. That's what the algorithm's doing. Literally just scalping, you know. $200, $200, $200, $200. Make thousands and thousands and thousands and thousands of dollars an hour. Just scalping a couple of ticks at a time. But with contract sizes big enough to buy out the entire ladder on that side from that side, so that it pushes price up and then they get out, and then they push price down and then they get out, and then they push price up. Only the banks can do it, because obviously they've only got the liquidity to do it. And that's why these work, these gaps, yeah? One bank pushes that bank down, and that bank goes, hang on a minute, I haven't got my fill on the other side yet. That bank pushes it back up to get his fill, to balance his book, make his money, and then the other bank goes and takes over from him. Which is why I'm playing this gap. There's no liquidity in the market. This is slippage. There's a load of banks now going, oh, for God's sake. Boss, I'm down 2.5 million. We'll push it up again then. Not a nice conversation to have with your boss, is it? Boss, I just lost 2.5 million in 5 minutes. You're sacked. My pound US dollar sell is doing good right now. Excellent. Just get me. I want to take 0.5%. I'm being greedy. That's 50% of that candle just retraced. Quite often these will fill 50 and then they'll stop. So closing 0.5%. I'm happy with that for the morning, to be honest, with this conditions. Right. Where were we? Aussie yen. So yeah, I'll quick look at the pound US now, because the pound US we haven't got RSI extensions on. So yeah, pound US dollar. I was looking at this one this morning in the Telegram group, probably with it was with Chris. So we've got this control candle at the moment here, which we are basically inside bar on for 6 days now. The pound basically, inflation is obviously going crazy. Interest rates are being put up to try and curb inflation. Interest rates have just gone up, and inflation is still forecast to rise up to 10% by Q4. So that's all negative for the pound. On the flip side, the US dollar inflation rate is also forecast to go up. So whether or not we get this strength on the US dollar is going to be dependent on what the Fed does. We don't know what the Fed's going to do. We're not going to find out until what's the next rate announcement? All right, next Wednesday. So next week we'll find out what the Fed's up to. So we're sitting and waiting at the minute to figure out what is going to happen. But when we get a break of this control candle, the likelihood is that's going to be where we're going to go. So I would say down. So this is a really good area to short in now. If you want to swing trade pound US, getting in short anywhere here on any time frame is good. And stop above here. If you want to be super safe, stop above there. Target obviously is going to be swing low. So your risk is going to be something like that or something like that. So it's a 1.5, 2 to 1 maybe. If you want to get super aggressive, get in there and stop above the recent 4-hour highs. If this is the move that does that, lovely risk reward on that, isn't there? Tiny little risk, huge reward potential to the downside. So good looking opportunity on pound US. There is the danger, obviously. We remain within this control candle for the next 3 or 4 days until the Fed announcement next week. In which case, then you, like this, you could get spiked out while it sits and waits for the US announcement. I still think the US is going to find some strength just because it's been very weak. It's a real fine balancing act at the moment with all central governments and central banks. The Fed has the most power, but it uses that power a lot of the time to get itself into trouble. So, and as the yen has, it just buys up too much, and it doesn't have the impact on the currency they were expecting it to. So all they've done is they've bought themselves into more debt, trying to dig themselves out of debt. You know, it's like you take out a bank loan, you can't pay the bank loan, you go to a loan shark, you use that loan shark's money to pay the bank loan, now you owe the loan shark twice as much, then you need to borrow from another loan shark to pay the loan shark back to pay the bank back, and all of a sudden you find 3 times you've done that, i.e. you've printed a load of more money, which is what the Fed keeps doing. You suddenly go, hang on, we're still in a hell of a lot of debt. What do you do next? Well, we need to get some more money, and how are we going to do that? Let's tax the population. But the population is really on their knees at the moment. Inflation's going up, blah, 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 blah. Cost of living's going up, oil's going up, they can't afford to do their cars. And the Fed's got to turn around and go, well, sorry, we've got to do something. All governments are in that exact situation at the moment. Oh, and by the way, we've just come out of a pandemic, which has completely emptied our coffers. This is why the markets are so heavy. And it's impossible, and this is why I'm not trading much Forex from a position trading perspective at the moment, because it's virtually impossible to forecast what's going on, because we've got way too many factors affecting monetary policy at the moment than we normally do. So it's a very tricky situation to be in. The pound, I don't think is going to have any strength. The US, I'm 50-50 on whether we're going to get it. Either way, this should come down because the US will be stronger than the pound. So that's why I think this is a pretty good short, and it's a good level to do it out of, because the market's kind of confirmed we ain't going higher. We're stuck. We got that reversal alert, and even since we got that reversal, we haven't gone anywhere. We're literally gone sideways. So there's no more balls. There's no one interested in buying this. All it's going to take is the Fed to go a little bit hawkish on Wednesday, and boom, that'll come down. Obviously, there's the opposite effects. You know, they could do the opposite. They could say we're stuffed, and the dollar will collapse, the stock markets will fly up, and this will pop. And if it pops, that's where you want to be shorting it from. But we don't know. If we knew that, we'd all be millionaires. But anyway, that's my view on the pound at the minute. Take it or leave it. CAD Swiss. Didn't quite get there. I got an alert set. These highs. I'd love to see this hit this high. I'd love to see this hit this high before lunchtime, because I get a feeling the euro's probably going to want to come down, and that will bring the Swissy down. I wanted the CAD to get up there on oil yesterday. It didn't. It just went sideways. We're stuck. But this is beautiful, lovely short. Again, looks absolutely fantastic. Nicely extended. We've been extended and embedded on RSI for a decent amount of time. When you get embedded on the RSI, one of two things tends to happen. A little bit like we had the embedding here. You either get embedded and you get another leg, or you get embedded and you accumulate. And this is an accumulation embedded, which is lovely, because obviously if you've got into it, all you've had to do is sit through nothing rather than sit through drawdown. Waiting. The danger of these accumulations when you get embedded on the RSI is that they stay accumulating and the relative strength of those currencies wanes. And you get back to a 50%, which gives it the opportunity to push again, and you get another leg. And that's why we see push, accumulate, push, accumulate, push. But what we like to see in a normal market condition is a pullback push, which is what normally happens: buying, exiting positions, buying more, exiting more, etc., etc. So this is in a really good spot, anywhere up here for shorts. CAD yen, bloody DAX. Grr. Never mind. What was that? That was 0.5%, wasn't it? So I could have had one out of it. Nice rejection. Again, back at the propulsion gap. We're running into the 2050. So if this is exactly, it's doing exactly what I said this morning. This is one of those slow grind days where your market structure is hideous and whippy, and it's going to do that sort of thing, probably. So this is exactly where you want to be selling it for the next leg down. It's at 200. I'm going to take a very low risk short. Oh, that's a high risk short. Sorry, closing that. Didn't have that set correctly. Pip amount I wanted. So reducing the risk down on this, I'm going to put it down to just above the gap. So it's probably about 0.1% risk. That's really confused you, because you just got the signal about 30 seconds before I did this on screen, so that's really going to confuse everybody. Looking for a new low, basically, just down here somewhere. Maybe even get out at a double bottom, if it works. But looking for market structure down there. So basically, if it breaks back above this high, I'm wrong. Market structure is peak formation low, new high, lower high, higher low. So that's why my stop, I've moved it down to here, because if I'm right and market structure is short, it shouldn't invalidate that level. You can double top it, you can maybe take it out by a point, but I don't want to see it break and close above. If I'm right. If I'm wrong, I'm wrong. Yeah, so CAD Swiss looks good for shorts. CAD yen, we've looked at all these yens. They're all starting to play out now. So I've been out of these for such a long time now. I just don't trust the yen at all. Even with this now in here, I'd be at break even on this thing, and if I get stopped out at break even, I'd be happy, because I just don't know what they're doing with the yen at the moment. The Bank of Japan has got to step in at some point. There we go. Look, yen is it's the strongest currency at the moment. Weakest currency is the CAD. Oh, that's brilliant actually, because I wanted to cover this for this afternoon. So this afternoon, I'll if I'm feeling alright, I'll come on and do the and do a session for the rate announcement this afternoon. What I would be interested in when I'm looking to scout news is what's going on with the currency strength. So the euro is what obviously we will trade during European news. So what we would be looking for is what is the strongest currency at the moment, because that's the one you want to be trading against the euro. So if the euro decides to tank, we want to pick something that's strong against it. Yeah, so euro down, if the yen is massively strong, that is the one that's going to move the most. We want to pick something that's going to have the best chance of people manipulating, basically. So at the moment, the yen is the strongest currency today. So euro yen this afternoon will be the one I think we will want to be trading, because that's probably going to move the most. The problem we have today with that is we've already hit ADR. So it's already done its average daily movement, but as we know, ADR has absolutely nothing to do with fundamental shifts. If we get some news come out that is fundamentally going to change what our overview is on the euro, or it's going to confirm what we were expecting to happen to the euro, this will do a 200-300% ADR move, because that's what it does. So if we get a nice pullback, lovely, best thing to see this morning would be for euro yen to gradually come off ADR, pop back to the Asian lows, sit in this accumulation, sit at those lows, ready for us to short it this afternoon. Would be lovely. So all these yens obviously are the same 4-hour extensions, absolutely exhausted, but they've been exhausted for ages. If you're in them with positions, ADR and euro yen, there you go. If you're in these with positions, you've just got to hold on tight. If you got into aggressive positions up there, fantastic, hopefully that's helped. So all starting to come down. I have no clue whether this is the start of the yen move or not. The US dollar yen, has that hit 135 yet? That would be the telling. No, didn't get there. So we didn't get to 135, which is where I've got my alert set. Potentially we've got another leg. Potentially. But, this is not, it's going to do that, boing, and then collapse. This is somewhere around here where we're looking for the yen to start powering up. So this could be it. H4 reversal alert. Just about to get that. Pull back, drop. So all these yens, same thing. Hopefully these will all continue to go short. So bias on them, I would say start looking short on them now. 125, just about to get triggered on the pound yen. Euro Swiss, we've got levels coming up. Spot on. Euro Swiss short now, right now. M5 reversal alert, you just had it, you're 5 minutes late on it. Spot on, bounce off the highs. Worst case scenario, push up, second position, drop. Euro is basically, I think we're probably going to get some downward movement on the euro today. They've been pushing up to fill this gap, which they've just done. So we had the Swiss franc strength and they've gone back to source on it. Now they've got the opportunity to go short. We are short on this. Yeah, euro Swiss. But again, depending on what happens with monetary policy, if they put interest rates up, it's a sign of the ECB stepping in, trying to help curb inflation. That's a positive thing. So that may have a positive impact on the euro. Whether the markets have factored that in or not is what's going to make the currency either inflate or deflate this afternoon. We don't know. So, but yeah, it's in a lovely technical spot. You've also got this level for a position trading perspective. Yeah, we've got this level here. So we're massively extended on the 4 hour. Yeah, where we normally see our drops occurring. We're massively extended there right now. So if that decides, no, we want to get embedded, we've got additional positions that we can add on the way up. If it gets up to there, we're going to be, off to the moon, aren't we? So you're going to get a pullback off that. It's the euro, for God's sake. Even if Lagarde turns around and says, we're going to wipe all debt, they're still going to get themselves into debt because they've got no economy. So we're not compared to the rest of the world, and they've got war on their doorstep. So it's just not good. I'm still bearish, but a little bit little bit sidewaysy bearish at the moment. So, but looks really good Euro Swiss for shorts. Euro Yen, Euro New Zealand. Euro New Zealand's just got extended, touched it. Not very good reaction point. It's not bad. It's a zone, so you know this is the area we've turned at before. But equally, you know, we are holding, so we're kind of in this ever so slightly contracting kind of move at the moment. We're in a range, so it's a beautiful range short if you fancy a range short. Lovely. Small risk if you want to position trade it. Entry, second entry, maybe 3 or 4 up to 175 ADR. If it gets all the way up there, yeah, you're going to be ready for the move. So either or. It's only just extended though, not the best in the world. Pound Swiss, love Pound Swiss short. It hasn't gone anywhere yet. This is exactly the same as the Euro Swiss, except the Euro Swiss has managed to fill that gap. The Pound Swiss hasn't yet. But the pound is obviously weak. God, that's the first bit of selling we've had. While I've been waffling on. That trade I took however long ago is just... Woo! We just tapped into that level. Let's see if we can crack that. So we've made a new low. Double top, new low. Going our way. I'm not going to add to this. I don't want to put too much risk on today. It's far too slow. Yes, Pound Swiss, lovely looking short. The only thing I don't like about this is we've still got this big move. Remember I said a lot of the time they like to fill these 50%. If you go back in time and look at these, they either get filled 50% like that sort of thing there and push away. That one actually got filled after. But a lot of the time they will move into there, and it's basically a case of the people that sold to create this move are adding to their positions. They will add somewhere in here where they think they get good value. A lot of the time it seems to be 50%. I don't think there's any real logic behind it. It's just where the orders are sitting. So this could be it, and then a push back down from there. So again, this is going to be driven. The Swiss franc will be driven by the euro. The euro is being driven by the news this afternoon. Morning, Profster. Didn't see you sneak in there. Euro CAD. Have a look at that one. So pound yen. I'll quickly cover the pound yen. We've kind of covered it. Yeah. Did anybody take this yesterday? Did anybody take any of these yens? Yesterday was the day, wasn't it? Yesterday was just the day where they were all getting to that point where we were like, this has got to end. Ugh. And it just so happens I got taken out of the one that I got into just before it happened. Anyway, Stevie, I just seen your message. I'll have a look at that in a sec. New Zealand dollar CAD. Haven't quite got these lows yet. I would like to see them take these out. I was waiting for some Canadian dollar movement yesterday off of oil. We didn't get it. Canadian dollar is massively strong at the moment. So this is a counter trend bounce down here. As you can see, we are accumulating, and the RSI is coming out of extension. So this is one of those I was talking about where the RSI comes out of extension and it does that, potentially. If we get down to there, that'd be a lovely scalp long. If we don't get down to there, I would be looking for shorts somewhere up here, and then sort of trying to add as the 24 and the 72 come down on top of you. But it's a risky long. New Zealand dollar yen. US dollar Swiss is the only other one. Got a long way to go. Long way to go. This Swiss franc killed the US dollar when we powered it up. It undid many days of movement. So literally in a week we undid 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We undid 3 weeks worth of movement in a week with that move, and then it continued to come back down and retest the 72. So at the moment, bias is short Swiss because of the euro, long US because I think the Fed is going to intervene and do something to keep themselves strong. They still want to remain the world's currency. So I'd be looking for longs. We're a bit extended at the moment, so I'll be looking for pullbacks and longs on it. On the H4 chart, obviously we're extended to the upside. So you can look for shorts, but I think you'll counter trend on the shorts. We're running into areas where potentially we might see some sellers starting to step in who think the US dollar is going to continue to weaken. There's less of them though, I think so. So that's all the RSI extensions. EuroCAD. We got the double bottom bounce, the triple bottom bounce there. Reversal alert, accumulation. I'm short euro. This is a really, really hard one. This is what I said yesterday. I think yesterday in the live room, we were talking about it as this candle was forming, weren't we? We were looking for a reversal off these lows, and I said it's a lovely long, but it's counter trend. So yeah, if you've got it long, hold it, but protect it, because ECB is going to potentially dump or pump this, or whipsaw it. Don't know. Up to you what you want to do with it if you're long on it, but yeah, you would be long on it now, obviously, off of this triple bottom. So I just got to check my DAX trade. It's dropped again, 0.2. 14,269. So I'm just going to put these levels on. 14,269. Pretty much where my level is. 14,219. So these are potential levels I would expect to see some kind of resistance, support. Failing these breaking, somewhere down there. We'll see where we go. We may be trying to get a new high in at the minute. So, in fact, I'm going to break even it. How much risk have I got on it? $150. I'm just going to pull my stop down ever so slightly, just reducing risk on it as we go. It's not the greatest trade in the world, is it? EuroCAD, yeah, so yeah, it's a lovely technical triple bottom bounce. But look at the EuroCAD, Euro Swiss and EuroCAD and everything. I mean, it's just down. So this is the one I said about yesterday. We're kind of in this expanding wedge, which is very hard to trade because there's no market structure in this. Market structure is a series of highs and lows. An expanding wedge is a series of higher highs and usually lower lows at the same time. In this case, we've got a triple bottom, but it's the same thing. It's basically a range. And at some point, that range will break. But by the time that range has broken, it's too late to take a range breakout and you get a false breakout. So it just becomes false breakout after false breakout. But overall, you can't argue with that. Canadian dollar is massively strong. The euro is weak to neutral. You want to be looking for shorts. So if you've gone long, protect yourself ahead of ECB this afternoon. Is all I would say. And gold. We'll have a look at gold. Gold is sideways. Still sideways. Moving averages are flattening. So, and there's very little distance between. We're sideways. We're range bound. So just look for lows and highs on it. Drop down to the hourly. Start buying it up down here, start selling it down up there. Right now you're stuck in the middle. So no idea. No idea. There's no US dollar news to push it anywhere apart from CPI tomorrow. Wrong week. CPI tomorrow afternoon. And we've got CAD unemployment tomorrow afternoon as well. So big day for the CAD in the US tomorrow. Was that CAD unemployment on there yesterday? I didn't see that yesterday. Is that just me? Maybe not. Anyway, yeah, so we've got CAD and US news tomorrow. Stevie, put the S&P next to the DAX chart on 5 minutes. Yeah. This is what I was talking about yesterday. This is sector buying, yeah. So this is what I was saying about how the stock markets are purchased and bought in sectors. So, you know, this is them selling a sector and buying a sector. And that sector of stocks will have stocks in the NASDAQ, it'll have stocks in the ES, it'll have stocks in the S&P. I'm pretty sure if we look at the FTSE, you'll find similar movement on the FTSE, yeah. Because some of the stocks in the sectors they're buying at the moment are also UK-based stocks. You'll find the same thing happening in France 40. When it's illiquid like this, you've got very little speculative purchasing or selling going on. It's all algorithmic. It's just everything moving at the same time, which is why we tend to get these ranges. You know, this is, like I said today, it's going to be one of those horrible slow days. The nice thing about having news is you can anticipate them. The days you get ripped to shreds is when you have got no news you're anticipating causing this in the market, and the market just goes into a sideways movement with whipsaws. Those are the days you get chopped to bits. Today I was anticipating it, so I've adjusted my trading accordingly because I think it's going to be like it is, and luckily it has. So, but you can't normally know that. Well, you can always know it when there's news. I mean, that's you know, it doesn't take rocket scientists to know that there's a massive news event coming today, and the market's unlikely to want to go mental ahead of it. You know, it's like someone saying, you've got a roulette table, it's got red and black on it. You can take a bet now, if you want to, on red or black, but what we're going to do at 12 o'clock is remove one of those colours. Would you rather place your bet now, or would you rather wait for it to be removed and then place your bet? No one's going to say, oh, actually, I'll place my bet now because I've got 50-50 chance. It's not as good as the 100% chance I've got when I've seen the thing move later. That's what the market's sitting there doing. Right, we got a load of this to buy. Shall we buy it now at this high price or take a punt on getting a much lower price? We're going to buy it anyway, so if it goes up, we're not going to lose. Our customers are just going to get a slightly worse price on it. Or we've got the opportunity to make more money, potentially, later this afternoon. They're always going to take the option that potentially makes them more money. So, unfortunately for us, it means we have to sit through this dire wallpaper, paint drying scenario. My stop loss didn't move to break even on that trade, did it? Did I move? I'm sure I moved it to break even. Maybe I didn't. No, I didn't. I decided not to, didn't I? I just moved it down a bit. I'm going to break even on it now because we've got some bullish price action. Look, we've just made a new higher low and a new lower high. If this makes a higher high now and a higher low, that's bullish. Wait for this candle to finish. If it closes up here somewhere, I shall take my massive 0.1%. In fact, there's a load of buyers. Well, sorry, there's some buying coming in. So yeah, I'm going to close it out. I honestly can't be bothered. I feel like crap, and this is so hard to trade. It's just not fun, is it? So yeah, $600. I'll do. Okay, so I've covered everything I need to cover. The propulsion gap you have just above near the open has filled on my MT4. To the right side of the third red candle after the open. Steve, you're going to have to tell me what your... I don't know what chart that is. I'm on a delay. What chart is that? Oh, sorry. Here. Just above near the open. Third red candle after the open. Can't be that because I haven't got 3 red candles after the open. What do you mean that one? That one? This one? Here. Oh, right. Okay. You're talking about that, aren't you? I think. Yeah, yours might have filled. Mine hasn't. Because my broker spread didn't manage to close it out. It's a pipette out, basically. But doesn't matter. You know, these are... some people will have that filled. Here, they won't have this. But you know, these are areas to look at. You know, they're not. It's not. This is not an exact science. That one may have filled on some people's brokers as well. And in fact, you know, to me, that's filled. Yeah, they've pushed down. There was an area there they needed to retrade in. They retraded in it. To me, that's filled, that one. Yes, it didn't close it off, but it doesn't matter. Some people are going to lose, aren't they? Whoever's not in that little gap there that didn't get closed, they lost. Same here. Pushed up into there twice. That's done, that one. As far as I'm concerned. When that happened, that was done. It came up and double topped it, but that was done here. Yeah, on my Robo Forex it's filled as well. So my Robo Forex, that filled. So yeah, just different brokers. But all this is doing is showing you that there was a large, strong move out of an accumulation. They will retest that at some point. That's all. You know, whether it fills or not. We're using them as, I want to see it come here, or I want to see it go there. I'm not worried. Somewhere around there, it's like support and resistance. Yeah, somewhere around there, they're likely to do something. Yeah, somewhere around here, they're likely to do something, because we know something happened there previously. We know something happened there previously. A load of sellers stepped in, or everyone decided they didn't want to buy it above that price. Whatever the reason, that's where it stopped. So somewhere around there, it's likely that something is going to happen again. That's all we're saying with these gaps. It's the same thing. Something happened. Therefore, let's have a watch of that level. Lee, I'm new to MT4. Could you explain how to work out lot sizes for indices? No. My brain hasn't got enough power today. The best advice I can give you is go and get a tool. There's one. This one, Money Manager Graphic Tool. Yeah. Google this. This is in the Telegram group, Money Manager Graphic Tool. So if you go into the Telegram group and go into the file section, this is in there. This will help you. Yeah. So you put this on your chart. You hit B or S. Okay. You set your risk and your stop. Right. So I'm here now. If I hit the B button now on this chart, it draws lines. I can close it out. Let me just draw it down here. So wherever your cursor is, basically, yeah, draws lines, and it shows me what is going to happen with my order. Let me just put it on a bigger screen. So this is my TP. If I change that, yeah, it shows me how many pips, yeah, and this red line here is my risk. So at 30 pips, I will be risking 9.8 lots. If I move it down to here, 62 pips away, I will need to risk 9.8 lots. Oh, that's because I'm risking the same, sorry. It's this one here, max lot size, 4.7. So it basically tells you what lot size you need based on where you're going to put your stop. So if you're going to go long here and put your stop under this low there, you need to get in with 12.28 lots to risk 0.3% on your account. And you can change that. So let's say you want to risk 1% per trade. Yeah, if I'm going to buy now and put my stop there, risking 1% a trade, I need to get in with 44 lots. And it tells you, let's say I'm going to target this low here, 140 pips away. It tells you that you will make 4,899 and you're going to risk $772, which is basically all calculated for you. You can have it follow price as well, so that when you click that button, it stays on price. So these lines will tick up and down. Really good little tool, money manager graphic tool. Really helpful for calculating stuff. That's how I started. But after a while, you will just get to know that trying to be accurate with that sort of stuff doesn't make a lot of difference. If I want to go long on something, I'll get in with a lot, for example, or 0.1 or whatever. Drag my stop down, see what that is, and do I want to risk more? Yeah, I'll add another couple to it. But if you want to be accurate, that tool will do it for you. There's lots of websites out there as well. In general, lots equals risk amount, pips times the pip value. Yeah, exactly. As Diamond has said, it's not practical to calculate it in real time. You need a tool to do it like that. Money Manager graphic tool. It's I don't know who made it. I think I got it off a Forex factory many years ago. It's really handy for position trading as well. I was going to build my own, but I didn't bother. You'll when you've been trading for a while, you get used to not worrying too much about risk in terms of I'm going to risk £50 or £100 or 0.5% or whatever. The market is going to move up and down a lot, and if you've put too much risk on, take a bit off, but don't go £50. But don't try and do this compounding thing that everybody tries to do. Compounding doesn't work. As much as it looks great on paper, and you can produce a spreadsheet which shows you compounding and how much it grows your account and how you can increase your lot size as your account grows, etc., etc. At the end of the day, if you grow an account from 5,000 to 50,000, by the time you get to 50,000, your brain will be fried because you'll find it so hard not to take profit off the table. You need to work in percentages. Forget pips, forget money, work in percentages. My goal is to return a percentage return on my account. Yeah, I've got to do 8% to pass this evaluation. That's my target. I don't care how I get there. I'm going to try and do this, 8%. If I can bag 0.5% a day, it's going to take me 16 days. If I can bag 1% a day, it's going to take me 8 days. If I can bag 1.5%, it's just, that's what you work at. If you want to make 10k a month trading, you need to work out how much liquidity you need, say a 100k account, and you're going to need to return 10% a month. Yeah. How you get to that 10% doesn't matter. The number of pips something moves, its ADR, is different on each pair. The pip value is different on each pair. The percentage gain you get from a trade is the same regardless of what you trade, whether I trade the DAX, the Dow, S&P 500, yen, Bitcoin, whatever, percentage return. If you concentrate on this, yeah, I've got a 30k personal account. I'm trading exactly the same way on my 30k personal account as I am on this 100k evaluation, because I'm not focusing on money. I don't know. This is totally irrelevant. I've got to do 8%. I like to return 10 to 15% a month personally. So if I now trade a 1 million account, my focus hasn't changed. The fact that every time this ticks costs £200 instead of £25 or whatever has no meaning to me. The percentage I make on my account is going to change because I'm going to hit this button and risk a percent on a trade which will have a stop at a certain level. How much is in my account doesn't matter, does it? I could have 20 million in there. I'm still going to risk 0.25% a trade. But you can't work all this out in real time. You see how quick, I mean today you haven't seen how quick but yesterday I was in and out of trades. If you look in the trade in the signal group, I was in and out of trades in 30 seconds. You haven't got time to calculate a lot size. You just hit a button. This is why I built this. If you want to scalp small time frames like M5, you need to be able to just go, get me in, move me to break even, get me out, get me in twice. You've got to be able to do that fast. If you're swing trading, it doesn't matter. Yeah, on here, if I want to take a euro yen long here, I just hit the button, drag my stop down, and then go right. What's the risk on that? 200. Do I fancy a bit more? Yeah, let's put another 1.5 on. You got loads of time, haven't you? Because this thing's going to take an hour to get down here. Well, hopefully it won't get down there. Hopefully it'll just go up because it's at ADR. But if you want to do it properly, use that tool. So what I should have done, let's do it properly as well, is to risk, let's say I'm going to risk 0.5%. So risking 0.5%, with my stop there. Oops. My lot size should be 2.84%. So I've actually got, with one contract, one lot on, 1.5. I've probably got about 0.25% on there, haven't I? But after all, you know what you get in with and what. Your base currency makes a big difference as well. So if it's a dollar account or a pound account, the cost of a pip is going to be different depending on whether you've got a dollar or a pound account when you're trading pound pairs and dollar pairs. So again, it's complicated, and I went through the same thing. It blows your mind. So just get one of these, and then your mind doesn't have to get blown anymore. But eventually you'll stop worrying about it. You just hit the button, go long, and then decide if you fancy a bit more risk on it. If that jumps up there now, I'll just move that up to break even and not give a monkeys. Doesn't matter. If it drops, worst case scenario is I'm going to lose $200. I might even take another little short there if it drops down to there, with a little tiny stop there. So take another 1.5. But risk is a lot less important. So I will be watching my Trade Manager dashboard, which I haven't got on this terminal. I'll be watching my Trade Manager dashboard now, and I'll be watching this. So it doesn't matter what lot size I get in with, really, does it? I'm interested in this. If I go into 0.25% drawdown now, I'll just close that position out. This is what this is for, so I can see what's going on with my account. I'm not interested in this. That is key. In fact, I kind of want to get rid of this. I'm not interested. Just skews you, because what you do when you're using money, if you've watched the Boocamp, I go on about this quite a bit in the Boocamp, but if you watch this, what is this, right? To me, that is my mortgage, my car payment, and and a weekend away in Paris this month. Yeah, to you, that might be a month's salary. I've no idea. I don't know what it is, but this has a meaning to everybody. Yeah, today I've earned not quite my car payment for the month. Yesterday I earned my car payment for the month and my mortgage. If you focus on this, when you get to $500 in profit on a trade, you will go, I'm taking that. That pays for a hotel for a couple of days in London. If you focus on that, you won't take that. That will become $1,500 because you will be looking to take 0.5%. So focusing on money or pips skews you completely into taking trades off too early and all sorts of nasty habits. That will help you. Which is why that tool is very, very good, that one. That's why I sort of stuck with this tool when I found it. There's lots of these out there, but the thing I like about it is it talks about how much do you want to risk as a percentage. You know, I don't care what that is. What do you want to risk as a percentage on this trade? I'll work the rest out for you. Anyway, I don't really want to be in this euro yen long with the yen going mental as it is. So I'm just going to close that out. So I don't want to be in it. Right, that's all I've got for you today so far. So this afternoon, the way the morning's gone, it's a bit obviously slow today as we were expecting. So what I'll do is I'll come on at 12:30 and we'll do a special news one and just be interesting, first of all, just to see what happens to it, but secondly to try and scalp this today and see if we can get some decent movement off of the euro and potentially off of the DAX. If I feel like crap in about 2 hours because I've got this horrible cold, I will not do it. But you know, I'll see how I get on. There you go. I'm glad I got out of that trade on that one. Push back up again. So we're looking like we're coming up to challenge this high. We've put in a higher low. We are attempting a higher high here. If we don't make this higher high, and this is where we stop, we've got what? That's a really bad drawing. Symmetrical triangle formation. Okay, so I will leave it there. So yeah, plan is I'll be on again at 12:30 this afternoon. I'll put a note in Telegram, and then we'll watch what happens with the rate announcement. The press conference as well is quite often very volatile, depending on what Lagarde says. So I'm not going to come on for that as well, and I probably won't be on until 1:30 because it's 3/4 of an hour of rubbish. So yeah, I mean basically I'll come on and we'll see if we can maybe scalp a bit of this movement. So we'll see what happens to the euro when the rate is announced and see if we can grab some momentum trades off of it. And when it settles, wherever it's got to, we may be able to play a fade. And quite often the press conference will fade the initial move, but it all depends whether that rate comes out as expected or not. If it comes out as expected, we'll probably get a whipsaw and a fade. If it comes out as something else, who knows? Could go anywhere, couldn't it? So we'll have a look at that. I'll come on about 12:30ish, 12:45 that is. Other than that, there's nothing else today. Yeah, and the yen at the moment is the strongest currency. So the weakest at the moment is the Aussie dollar and the pound. So apart from that, everything else is pretty neutral today. Not a lot going on. But obviously this yen strength can wane by the time we get there, so we'll see. Okay, guys. So yeah, I'll be back at. Oh, look at that. That's because I closed that. Closed that Euro Yen trade out. Now look at it. Typical. Hi Lee, can you repeat on how the Money Manager graphic tool? I downloaded it on MT4, but it does not seem to work. I'm using mobile. You won't work on a mobile. You got to only work on a desktop. Rewatch the video, Ferdinand. I'm not going to re-explain it all again. But rewatch the video. Basically, you to cut a long story short. Yeah, when you put it on there, right, you just either hit B on your keyboard or S. If you hit S, it will enter a sell, or it will start saying, oh, you want to sell. If you hit B, it goes, you want to buy. Yeah. You can adjust the risk-reward ratio with buttons. You can increase your risk with buttons, so 0.6 risk, 0.5, 0.4. You can increase your lot size manually, and it will tell you what your risk is going to be. Yeah, it does. It's just brilliant if you want that sort of thing. And then when you've done that, yeah, what you do. So I didn't explain this bit. I should have explained this bit, shouldn't I? Really. So what you do, say that's the trade I want to take. You go, right, I need to put 3.41. 3.41, buy. So it doesn't trade for you, it's an indicator, it cannot take trades. So you basically, all it's doing is it's saying, you're saying to it, I'm sorry, what lot size do I want? 3.41. That's what you want to take if you want to achieve a 0.73 risk based on that stop loss. If you move that stop loss down, you want to be taking, oh sorry, a 1 point, I'm looking at the wrong one all the time, I keep doing this. 1.58. Anyway, go and play with it. Play with it on your MT4. Right. I will see you guys hopefully at 12:30. If not, if you can't make that, I'll be back tomorrow morning at 7:50, same time. We'll have a look at the aftermath of what's happened with the euro and get ready for the US CPI. Okay. If I take any more trades this morning, I'll put them in the Telegram channel in the Signals group. I doubt I will. I might have another go on this. It's pushing up again. I quite fancy a drop on it, but I don't really want to take much risk on today because this thing is in all sorts of sideways pain, so not really much fun to trade today. Okay, guys, hopefully see you later. If not, tomorrow morning, and yeah, I'll be in the Telegram group if you need me.